Hello, and a very good afternoon to those here in Malaysia and this region, and good morning to those joining us from Europe and UK. I hope everyone is doing well. I'm Daniel from the British Malaysian Chamber of Commerce. Welcome to the BMCC CCI FM Economic Outlook and Post-Budget 2022 webinar, organized jointly by the British Malaysian Chamber of Commerce in partnership with Chamber of Commerce and Industry France Malaysia. Both Mr. Abra Anwar, Chairman of BMCC, and Mr. Jacques Lazarovici, President of CCI France Malaysia, as co-hosts of the event, would like to welcome everyone to the event. Today's event aims to give us a clearer picture how we can accelerate Malaysia's economic revival following the pandemic, and we will focus on three main areas, which are driving economic recovery, restoring the country's resilience, and catalyzing reforms. We have with us today a lineup of distinguished guest speakers and panelists who will undoubtedly leave us with insightful inputs on the economic outlook for Malaysia. Firstly, we are honored to have Yang Berbahagia Datuk Johan Mahmud American, the National Budget Director at Ministry of Finance, Malaysia. Prior to his appointment at the National Budget Office in 2018, Johan was the Deputy Director General for Human Capital at the Economic Planning Unit under the Prime Minister's Office from 2016. Before serving the government, Datuk Johan worked in the private sector for 9 years in corporate finance and accounting roles at MRCB, Simon Duffy, and PwC. Without further delay, I would like to invite Yang Berbahagia Datuk Johan American to deliver his speech on the National Budget 2022 Recovery, Resilience, and Reform. Over to you, Datuk Johan.
Well, a very good afternoon. Thank you so much, BMCC, for inviting me. Abra, Daniel, thank you for a kind introduction. So thank you so much. I hope to basically provide an overview of Budget 2022 and perhaps share some of the thinking behind the government's preparation of Budget 2022. Let me just first start off by making 5 key points about Budget 2022. The first is it's an expansionary budget. We've provided an allocation of 332 billion. It's the largest ever, at least it compares against 2021 budget of 322 billion. We've also ensured that the government maintains its expansionary fiscal stance in that our fiscal deficit is only moderately reduced. We're targeting for 6.5% in 2021 and only a modest reduction to 6%. Obviously still high by any historical standards, but that's part of the government's conscious decision not to prematurely withdraw fiscal support from the economy. The second point to be made is in terms of assistance. The budget makes a key point ensuring there continues to be cash assistance to 10 billion income bantuan keluarga Malaysia individuals. But M40 is also not forgotten. Various tax measures, including zeroizing RPGT for disposals after 6 years. We extended also the sales tax exemption on cars, and also a number of personal tax reliefs, extension of the lifestyle 2,500, domestic tourism 1,000 for training, also widening the scope of certain tax reliefs. All in all, whether it's cash assistance to B40 or also the measures for the M40 to support domestic consumption, especially as we are really gearing towards 2022 being a year recovery. In terms of jobs, a key element of Budget 2022 is really to ensure that it's not just a recovery in terms of GDP, but also a job recovery. We've set aside 4.8 billion towards motivating 600,000 new jobs, acknowledging that we currently have higher unemployment than our previous norms. And a fourth point to make is in terms of businesses for support, as we want to drive not just the GDP recovery, the job recovery, but also income recovery, ensuring that our businesses, as the economy opens up, have access to financing in order to be able to jumpstart their businesses in a fully reopened economy and also invest going forward. some measures perhaps not as well highlighted in the media in terms of how we've taken on board some of the inputs that we receive from business chambers, such as extending investment allowances for another 2 years, and also extending in terms of carry forward losses from 7 years to 10 years. In addition to a strategic investment fund of over 2 billion to target strategic FDIs, I think this is partly in response to global minimum tax rates, where we can't fully rely on providing tax holidays anymore to attract strategic FDI, and hence we need to supplement also with capital grants. But that also requires to be even more targeted and strategic in such FDI attraction. And last point to make on the slide is, as mentioned, 2022 is something where we see as recovery. I think a key thrust of Budget 2022 is to really support and drive the economic recovery for 2022. This, as much as possible, to return the country to what were our norms prior to the crisis, but obviously embracing the new normal. And perhaps key in such a recovery is to ensure that the business sector embraces the SOPs. We're investing in obviously in expanding our healthcare capacity, all in all to ensure that we're able to have an uninterrupted recovery in 2022 without the need for any major restrictions or lockdowns in 2022. On this slide, basically motivating how for Budget 2022, it's one where it's really in line with the Prime Minister's principles of Corporate Malaysia. It is a budget that's ultimately from the people to be implemented with the people and with outcomes for the people. In this respect, Ministry of Finance undertook its engagement with various stakeholders, people, business associations, civil society, and really in trying to step up the level of transparency and engagement. This year, we have also taken the opportunity for the first time ever to issue out a pre-budget statement. I think this is one of the efforts to ensure that we were able to engage with civil society to be a bit more in line with the priorities that we set out for Budget 2022. We issued out 4 consultation papers on tax incentives, our Fiscal Responsibility Act, government procurement, and also in terms of cash assistance. And all in all, we've been able to then use some of the inputs towards enhancing these areas for Budget 2022. But beyond just receiving inputs, we're also key in terms of wanting to ensure that we implement Budget 2022 in full partnership with members of Corporate Malaysia. So beyond just government agencies, what we've undertaken is you see some logos of telcos. We're undertaking the distribution of free laptops to B40 university students in collaboration with telcos. We're undertaking a e-wallet initiative together with e-wallets. Another key area that we've learned during the crisis was the need to partner, particularly in terms of healthcare capacity. Beyond just the Ministry of Health, we've then also engaged with whole of government, with in-depth military hospitals and also the university hospitals, and also increasingly outsourcing capacity out to private hospitals as well. Another key partnership for the government is in terms of NGOs. We found that particularly during the crisis, NGOs really stepped up, and we want to continue that partnership through, for example, matching grants, which we are providing through Budget 2022 in areas such as mental health, social domestic issues, also income generation for even rural communities. But ultimately, in terms of getting the inputs and collaborating with Corporate Malaysia is really ultimately to drive results for Corporate Malaysia, whether it's providing, as mentioned previously, the cash assistance that we're providing to B40, expanding the social protection scheme, particularly where we found that the COVID crisis exposed perhaps gaps, particularly for the informal sector, delivering on jobs as per the priorities mentioned, providing necessary business support to ensure that our businesses, particularly SMEs, are able to reap the opportunities of reopen economy, and ultimately in support of the 12 Malaysia plan to drive a balanced, inclusive, sustainable development. I'd like to perhaps give some context towards the thinking in the formulation of Budget 2022. When we formulated Budget 2021, actually at that time, we anticipated that it was supposed to be a recovery year in 2021. However, COVID had other ideas. The emergence of the Delta variant and new waves that had endured in Malaysia required us to take on mitigation measures, including like MCO. With that, we've seen that what we originally forecast in Budget 2021, GDP growth of 6.5% to 7.5% GDP, had to be revised downwards. And our latest projection is 3 to 4%. And despite the third quarter results, we remain on track to achieve that. We're seeing that unemployment has moderated down, and it's at 4.5%, lower than its peak at 5.3% in May of 2020, but still at least a 1 percentage point on what we're used to in pre-COVID crisis times, and certainly not in line with full employment. Our colleagues from the Ministry of Entrepreneurial Development have estimated about 37,000 SMEs that have gone out of business during this crisis. And so that's perhaps the context of 2021. But we're certainly now looking ahead to 2022 with much greater optimism. Under the National Recovery Plan, the economy is being reopened. Perhaps the darkest times are behind us and we're seeing light at the end of the tunnel. With vaccinations having exceeded 95% of the adult population, we've been able to reopen the economy gradually and safely. There remain only 2 states that have not migrated to phase 4, but that should happen before the end of the year, together with then subsequently the plan to transition to an endemic phase. With that, for 2022, we project GDP growth of 5.5% to 6.5%, which is very much in line with the projections coming out IMF and World Bank. As mentioned, in terms of recovery, it's not just about the economy and GDP. It's also a job recovery. We hope and target to reduce unemployment to 4% or below, with the reopening of the economy and also the interventions that we've provided for. In addition to that, also to ensure that it's also an income recovery, especially for businesses as they recover in the upcoming year. Whilst recovery is probably the main focus of Budget 2022, we basically are looking at 3 Rs, not just recovery, but also resilience and reform. For resilience, we're looking towards ensuring that we strengthen in terms of our national resilience, particularly in terms of our healthcare capacity, to ensure that we are better positioned in the event of any future waves or even any crisis. Beyond such areas of national resilience, a key part, as mentioned earlier, was in terms of our social protection system. The COVID crisis exposed gaps, and amongst the measures taken in terms of widening the scope for informal sector, improving or enhancing the returns for those on unemployed benefit, also ensure widening the scope for our welfare payments as well. And resilience as well, also in terms of financial, ensuring that businesses and also balance sheets are strengthened through the support from government. And amongst the key elements of the 40 billion support, provide guarantees to commercial banks in order to facilitate access to financing for our SMEs. Last but not least, is in terms of reform, where we hope to provide fiscal reform. As mentioned, we're not withdrawing our fiscal support from the economy, where even next year it still maintains at 6%. However, this is not sustainable, and I'll expand a little bit more in a moment. But certainly in the medium term, this needs to be reduced and as targeted in the 12 Malaysia plan to achieve between 3 to 3.5% by 2025. In addition, this will be supplemented by our Fiscal Responsibility Act, which we target to table next year, to then provide even further legal thresholds by which the government will then have to comply with to ensure that we maintain a responsible and sustainable fiscal management going forward. Inclusiveness for the rakyat in terms of reform is to support the 12 Malaysia Plan objectives, amongst others, to reduce the gaps or the differences in development between different regions within the country. And also in terms of, last but not least, in terms of reform on sustainability. I think this is, one should not waste a good crisis, and certainly we're looking how we can then ensure that we have a greener development model going forward. Some of the initial measures included in Budget 2022 includes incentives for electric vehicles. There's a climate change fund worth $1 billion. So the measures such as BORSA, piloting carbon trading. Let me spend a little time looking on fiscal. This basically sets out in terms of our fiscal position from Budget 2020, 2021 going on to 2022. What on screen, the bottom line is basically our total expenditure, as mentioned earlier. You can see in Budget 2022, we have a total expenditure of 332 billion, an increase from both 2021 and 20. What you then see is, again, the fiscal deficit, second last line, showing that reduction from 6.5% to 6%, but still, by any historical standards, high, and also higher than what we initially had projected for budget 2021. One area perhaps I should mention is that whilst the government is committed to maintain its expansionary fiscal stance and a relatively high deficit at 6% or at least 97.5 billion, this will be financed through debt, and we have sufficient ample liquidity in the country. One area which certainly the government continues to face challenges is obviously in terms of our current balance. By law, we are unable to borrow to finance our operating expenditure. And in this respect, you would have seen that we are in this sort of transition phase going from 2021 to 2022, where our revenues are obviously still dampened by the current business and economic environment. However, we then are at the same time facing almost greater demands on our operating expenditure. This includes in terms of assistance, the need for example, even higher subsidies as a result of high commodity prices. And so, as you would have seen in our budget, we have announced a couple of revenue measures, some one-off in nature, such as the Cukai Makmur, but with also a couple of others, some in terms of stamp duty on listed share transactions, and also in terms of foreign source income. However, at the end of the day, there were many discussions leading up to budget in terms of strengthening the revenue base of government. But the decision that government has taken is perhaps this would not be the right time to introduce broad-based taxes such as the GST at this time, as not to stifle the economic recovery in terms of any broad-based taxes that affects the majority of, for example, majority of individuals or majority of businesses. And so even let's say, for example, in the one-off Cukai Makmur, the approach taken is that these will only be one-off and also already affects the larger set of companies, probably only about a couple hundred corporations at that. More in terms of the fiscal constraints, as mentioned, the government maintains its expansionary fiscal stance. The left bar chart shows the rising debt by the government. We see that basically we are already achieving a limit or total of 1 billion or 1 trillion of government debt by next year. We've, in line to support this expansionary stance during this COVID crisis, last year we went to Parliament and YB Ong ranks amongst parliamentarians to support the increase of the statutory debt increasing from 55 to 60% in last year, 2020. And just last month, we've increased it further to 65% as we project that our statutory debt levels will reach about 63% by year end. These certainly are very high by historic standards, but even more so, the issue in terms of debt sustainability is that on the right bar chart, you see our debt service charges in terms of interest payments. They're reaching 17.6% by this year. Historically, we've had a rule of thumb to keep it within 15%. So this is certainly high, and what this translates to means that for every ringgit of taxes collected, almost 18 cents is used just purely to pay interest, and this isn't before talking about any ability to repay the principal. So this certainly is part of the need to then, whilst we continue with an expansionary fiscal stance for next year, there are obviously limits to what the government's able to provide support for, and in the medium term, the need to then achieve a more sustainable fiscal position. Let me then turn to my last slide. And this provides basically just an overview in terms of budget 2022 and touching some of the areas that I've already mentioned. In terms of the 3 Rs, you see the recovery, resilience, and reform matched against the 3, shall we say, segments for the economy, rakyat, and businesses. As mentioned, in terms of the recovery for the economy, the target is by 2022, the economy will be fully reopened, and we hope to intend working with all stakeholders to ensure that it remains open. And a key part of that, moving down to the element of resilience, is strengthening the health system to ensure that we have the necessary capacity to expand on our public health capacity, working with both other ministries and also private sector, and also ensuring that we have the vaccines for booster shots. And further, in terms of reform, one area of reform is in terms of GLC transformation, in tandem with the expansionary fiscal policy to provide also that GLCs crowd in, not crowd out private investments. Moving on to rakyat, as mentioned, a key pillar for Budget 2022 is to basically help generate 600,000 new jobs with an allocation of 4.8 billion. What key part of this is the hiring incentives, where we're providing 2 billion through SOCSO, which provides anywhere between 20 to 40% subsidy against monthly wages for up to 12 months for businesses. And these vary with higher rates provided for example, long-term unemployed, women coming back to the workforce, or even the handicapped OKU being employed by companies. In support, the hiring incentive, we also have reskilling and upskilling of 1.1 billion, which basically involves training programs with placements guaranteed. And there's also, in addition to that, direct employment through the government and GLCs. In addition to that, for rakyat, we have assisting the Keluarga Malaysia with the BKM, which stands for Bantuan Keluarga Malaysia, 8.2 billion to benefit 9.6 million recipients. This is higher than perhaps what was provided last year, which only had an allocation of 7 billion in comparison. In addition to that, M40 also benefits, as mentioned, from personal tax relief, and also the extension of the EPF minimum contribution rate of 9% for another 6 months. Strengthening social protection, as mentioned, is a key part where we've expanded the coverage of our welfare payments to from 980 to 1,169 ringgit per month. That's in line with the 2019 food poverty line income. In addition to that, we provide subsidies, for example, providing 80 to 80% subsidy on SOCSO coverage for the self-employed, including artists, gig riders, agriculture, self-employed, as part of helping to strengthen and broaden the coverage of social protection. And in addition to that, also improving on the EIS, employee insurance system payments, particularly for unemployed, recognizing that particularly coming out of this crisis, some would have been unemployed for a longer period. I've mentioned in terms of the reform and inclusiveness, we've obviously mentioned NGO collaborations, the one where we're undertaking matching grants together with foundations to ensure that we support some of the very good work that civil society is undertaking. Transitioning to businesses, SME financing is a key part of it, ensuring that as the economy reopens, that we provide the necessary support. One key part is that we recognize that perhaps as businesses have been eating into reserves and some would have restructured their loans, the guarantees provided by the government to commercial banks includes the guarantees of existing facilities to enable provision of new facilities, especially for working capital. As the economy reopens, we want SMEs to be able to access working capital funds to restart and jumpstart their businesses. There's also soft loans provided directly from Bank Negara, up to 14 billion together with our development financial institutions. We also have microcredit facilities coming from the likes of BSN Agrobank, providing even up to 0% interest rate for 6 months, and also alternative financing, which provides for quasi-equity financing for those perhaps companies not in a position to borrow more. Also to help the cash flow SMEs is 6 months tax deferment. All in all, the spirit is as we transition to a reopening economy, we want to give some breathing space for SMEs to basically to gain their foothold in coming up back into the economic recovery. In terms of resilience and digitalization is a key agenda for the government. Next year, we'll be expanding the coverage of our and rollout of our 5G infrastructure to cover key states, including Johor, Selangor, and Penang. E-commerce and digitalizations, where we provide matching grants to help smaller SMEs to embrace either digitalization or basically online markets. Strengthening key sectors includes, as mentioned very briefly, strategic investment funds, which provides capital grants, perhaps to support strategic investments, FDIs, that are in line with basically our national investment aspirations, which are being finalized by our colleagues in BT. Some specific funding for tourism, given they're one of the most affected during this crisis. And there are some which basically extend, for example, the timing of carry forward losses from 7 years to 10 years, extension of reinvestment allowance 2 years, amongst various measures to support investments. There's also some to support safe compliance and SOP by companies, including refurbishment of 3,000, including for ventilation, and also in terms of the deductibility for expenses related to the Safe at Work initiative by the MITI. Last but not least, in terms of reform businesses, is towards a greener and more sustainable economy. That's in line with moving towards a net zero carbon emissions by 2050 as being another part of the initiatives and direction under the 12th Nation Plan. And so really, so in conclusion, the government through Budget 2022 is really very much focused towards driving the economic recovery of the nation in 2022. We're providing an expansionary fiscal stance, but certainly that requires, it can only be achieved through the full partnership of the private sector, civil society, to ensure that we remain sustainable and safe in the coming year, supported by the various measures to ensure that it is not just economic recovery, but also a job and income recovery. With that, thank you very much.
Thank you so much, Dr. Johan, for the insightful overview of the Budget 2022, especially focusing on recovery, resilience, and reform. Ladies and gentlemen, now we'll move on to a couple of speaking session slots by our distinguished guests from Ernst & Young Tax Consultants, EY, focusing on insights for business. First up today, we have Mr. Anil Kumapuri, partner and Malaysia International Tax Leader of Ernst & Young Tax Consultants. Anil has over 20 years of tax experience and leads EY Malaysia's International Corporate Tax Advisory Team. He's a council member of the Chartered Tax Institute of Malaysia, a fellow of CPA Australia, and a chartered accountant with the Malaysian Institute of Accountants. He has worked on tax compliance and consulting engagements involving corporate income tax, petroleum income tax, real property gains tax, and stamp duty. Over to you, Anil.
Thanks, Daniel, for the kind introduction. Good afternoon, everyone, and thank you for joining us today. Thank you to the organizers for inviting us to speak to this really distinguished group. I'll be spending the next 15 minutes or so talking about some of the corporate tax changes proposed in Budget 2022. And as Daniel mentioned, my colleague Cheng Guan will then take on the indirect tax changes. So the first change I'll really be talking about is in relation to the removal of the foreign sourced income exemption. So Malaysia currently adopts what is known as a territorial system of taxation. That basically means that income sourced in Malaysia is subject to tax in Malaysia, and income sourced outside the country is not subject to tax in Malaysia. Previously, we used to tax foreign income which was remitted into Malaysia. So if it was earned overseas but physically remitted into a Malaysian bank account, that used to be subject to tax. But since 1998, most companies, and since 2004, all individuals have been given a specific exemption on foreign sourced income brought into the country. So really, as we sit here today, the only taxpayers who would be paying tax on foreign sourced income are Malaysian companies, which are banks, insurance companies, shipping companies, or airlines, because this category of taxpayers are not covered by the foreign source income exemption, and they're still subject to tax on foreign income remitted into the country. That being said, if I have a bank or a shipping company, for example, which has a subsidiary, and that subsidiary is undertaking non-banking or non-shipping operations, that subsidiary will still enjoy the foreign source income exemption. So it's only the company which is undertaking those 4 activities I mentioned earlier: banking, insurance, shipping, air transport, which are taxed on foreign source income. What has now been proposed is that foreign source income will no longer be exempt from 1st January 2022. So if foreign sourced income is remitted into Malaysia, it will be subject to tax. The proposed tax rates are 3% from 1st January 2022 until 30th of June 2022. And this 3% is going to be imposed on the gross amount. There's no guidance yet on what is meant by gross in this context. And from 1st July 2022 onwards, the foreign source income will be taxed at the prevailing tax rate. So if you're a Malaysian company, you'll be taxed generally at 24%. If you're an individual, you'll be taxed at prevailing rates, staggered rates up to 30%. To assess whether or not you'll be impacted by this change, the first thing you're probably wondering is, what is foreign sourced income? And what is foreign sourced and what is domestically sourced is sometimes not entirely clear, but typical examples of foreign sourced income would include dividend income from foreign companies, that is clearly foreign sourced income, branch profits from foreign branches, interest income on loans given to foreign subsidiaries, perhaps license fees earned from intellectual property that has been based in Malaysia but licensed out to non-residents. All those would typically be foreign sourced income. For an individual, if you're an individual who is from Malaysia, but you've been seconded, for example, to your group headquarters in the UK or in France for several years, your income earned overseas would also typically be foreign sourced, meaning under the current rules, you can bring it back and it will not be subject to tax. But that will change from 1st January 2022, potentially. So who will be impacted? It's really holding companies. So that could be Malaysian government-linked companies or Malaysian public listed companies with subsidiaries overseas, or even foreign companies or foreign groups which have established holding companies in Malaysia. So a British company, a French company, for example, which have decided, look, Malaysia is a good place to set up a holding company. We'll set up a holding company here to hold investments throughout Asia or throughout ASEAN. This holding company will now be impacted by this new rule on the dividends which come back to Malaysia. Foreign branches, Malaysian companies with foreign branches will be impacted. Treasury centers, lending centers, IP hubs in Malaysia, all of these categories of taxpayers will need to pay attention to this new rule. So why are we seeking to tax foreign income? This is a fairly dramatic change to the tax legislation. Why has it come up now? The first reason is probably to raise revenue for the government. You heard from Datuk Johan earlier. This is the largest ever Malaysian budget. We are running at a deficit, which we are trying to close or narrow. And the government really has this whole list of things they need to spend money on to spur the economy, and that spending has to be funded somehow. So to raise government revenue, that's probably one of the key reasons. Another reason could be international pressure of sorts. So on 5th October this year, the European Union released or updated their grey list. And the grey list is really tax regimes which the European Union is not unhappy with, but perhaps feel need a bit more work or a bit more refinement. So in their 5th October grey list, the EU put Malaysia, Hong Kong, Qatar, Uruguay, and Costa Rica on their grey list because we have foreign sourced income exemptions. And the EU felt that the foreign sourced income exemptions perhaps gave rise to unintended benefits or unintended consequences, which resulted in not enough tax being paid. That being said, the EU did not say we have to get rid of this regime. They just said, look, countries go away and look at the regime, maybe refine it a little bit and let's see what happens. So Hong Kong, for example, was also on that list. Hong Kong has come out to say, well, we will maintain our foreign sourced income exemption. But if companies want to enjoy this exemption, perhaps they need to meet certain conditions or certain substance requirements. So you can still be exempt, but you may need to meet a condition or two. Singapore was not even on the grey list, and Singapore will continue to exempt foreign dividend income subject to certain conditions being met. So we now know what is subject to tax in Malaysia, when this is going to be removed. We know who is going to be impacted. If you go to the next slide, this is perhaps some of the issues that companies will need to think about. So while we're moving to the next slide, the first consideration is really, what are you earning overseas? So if you look at the first box on the upper left-hand corner, the Malaysian tax regime only taxes income. It does not tax capital gains or capital proceeds unless those capital gains or proceeds relate to real property in Malaysia. So for example, if you're a Malaysian company or a Malaysian individual and you're selling shares overseas, you can remit the money back. That is a capital proceed. It should not be taxed as long as you've held that share as a long-term investment. So you can really see here, money is fungible. You could have dividend income, you could have proceeds from sale of shares, you could have interest on loan, you could have loan principal, and that's all sitting in a foreign bank account. You want to bring it back. You have to really distinguish what is income, what is capital. Tax residency, as I said, only Malaysian residents will be subject to this new rule. So for example, if you're an individual working overseas for many years, you'd probably be a non-resident for tax purposes. You probably want to plan your remittance back to Malaysia such that you bring your money back before you become a tax resident. Foreign tax credits, the third box there on the left. In general, theoretically, money should not be taxed twice. So if you suffer tax overseas, you should, in theory, be able to claim a credit against your Malaysian tax payable so that you don't pay tax twice. But it's not that straightforward. You need documentation. There are certain formulas to be observed. And ultimately, we find that most people or most companies will find that they don't get a full tax credit. And so there could be double taxation of the same income. Timing of remittance, as I said, this kicks in 1st January 2022. Can you bring in all your foreign income or all your money sitting in foreign accounts before that to mitigate the impact, to make sure you're not taxed? If you can't do that, can you do it within the first half of next year to enjoy the 3% tax rate instead of 24% or higher? If you have a holding structure in Malaysia, you're going to have to review, is that still the right answer? Is there a need to restructure? Is there a need to perhaps maintain funds overseas for deployment for overseas investments instead of bringing it back to Malaysia? Do you have a Labuan entity in a group? So Labuan is Malaysia's international banking and financial center over in East Malaysia. And Labuan companies are subject to a special set of rules. So you have to consider how those will be impacted, if at all. So there are a whole host of considerations, and these are just some things to consider. This is probably the budget proposal that we've seen the most interest and concern in from our clients. And there's probably going to be a lot more lobbying and a lot more discussions with the government before this is enacted into law. In the meantime, if some of these things I said resonated with you, you feel that your groups are going to be impacted, please start looking into it sooner rather than later, because there are, as I said, various timelines to be observed. The immediate timeline being 31st December is the last day foreign income can be remitted in without being subjected to Malaysian tax. So now moving on to the next topic. This is the one-off tax increase that Dato' Johan mentioned. So in the lead up to the budget, there was a lot of speculation that there would be targeted tax increases, perhaps to industries which were particularly successful during the pandemic, which saw really good results during the pandemic. But instead, the government has decided, look, let's not go on an industry base. Let's just collect tax from the companies who can afford to pay it, the companies who have earned over 100 million ringgit in taxable income for 2022, irrespective of what industry they're from. So if your company or your group is going to be hit by this, and this is looked at on a company-by-company basis, please really consider the impact. So you've got a budget for the tax costs. You've got to make sure that your tax estimates are taken care of, which I'll talk about on the next slide. And 100 million ringgit is only 24 million US, 21 million euros or so. So a number of companies could be hit by this. We also think that there will be a fair bit of scrutiny by the tax authorities, especially on companies maybe earning above 90 million ringgit or so. So the tax authorities will really look to see whether these companies applied their tax incentives correctly in 2022, whether they tried to defer income, accelerate the recognition of expenses, or anything else to really try and plan around this or to sort of mitigate the impact of this tax. So if you are a large company, just be prepared that there could be additional scrutiny on your tax affairs for 2022. This is a once-off, as Dr. Johan said. It is not a permanent change to tax rate. It is based on the year of assessment, which is generally your financial year, so it's not the calendar year. And you're not the companies which are in a non-December year end will already be in their middle of their YA 2022 now. Next slide, please. Tax estimates. So in Malaysia, a company is required to estimate how much tax it's going to pay for the following year. And the estimate must be submitted to the Inland Revenue Board 1 month before the beginning of the financial year. The company will then need to pay tax installments throughout the financial year. This may sound to be a fairly administrative exercise, but it is important, because if you underestimate your tax by a certain proportion, you will be subject to penalties, and the penalties can be quite hefty if there is a significant underestimation. The law allows for companies to revise their tax estimate in the 6th or 9th month of the accounting period. What is now being proposed is that for 2021 and 2022, you can also make a special revision in the 11th month. So for a December year-end company, for example, that would be November 2021. In the budget speech, it said that this special revision would only apply up to 31st October 2022. So clarification is being sought on this because it seems a bit unusual. As I said, the December year-end companies would have November as their 11th month. So surely next year, these companies would want to be able to enjoy this revision in the 11th month. So if you're going to be impacted, especially by the special one-off 33% tax, by the foreign source income exemption, do look into this and take advantage of this. As I said, it sounds fairly administrative, but the impact can, or the savings can be quite high if you make the revision at the right time. Next slide, please. Dr. Johan mentioned this, so I won't talk about it in any great detail. Currently, companies can carry forward losses for 7 years. In this budget, the government has clearly recognized that there'd be a lot of losses arising from COVID, and it could take some time for companies to recover and use these losses. So the government has kindly extended this carry forward to 10 years. So those of you who have startup losses, those of you who have not been recognizing the deferred tax impact of your losses because you thought you couldn't use them within 7 years, this may be a welcome proposal for you. Next slide, please. So this proposal is really effective retrospectively from 2019. So if you have losses in 2019, you can now carry them forward to 2029 and not just 2026, as would have been the case under the 7 years. Next slide, please. Reinvestment allowance. So reinvestment allowance is a fairly generous incentive in Malaysia. If a company reinvests in its business and meets certain conditions, it gets 60% of every reinvested dollar as an additional allowance. This is in addition to the normal tax depreciation or capital allowances. And this allowance can be claimed in the year you make the expenditure or in the year you incur the expenditure. This reinvestment allowance can be claimed against up to 70% of taxable income. If you can't use it, you can carry it forward up to 7 years for future utilization. So a fairly generous incentive. This incentive is probably one of the most major Malaysian incentives which does not require a pre-approval, meaning as long as the company has been in operation for at least 3 years, and as long as it meets the conditions generally being that it has a project to modernize, automate, diversify, or expand its business, and you have a project paper to show that, you can claim this reinvestment allowance automatically. No need to get approval from anybody, and you'll just defend it in the event of a tax audit. The reinvestment allowance has been in place since the 1990s, and the general rule is that you enjoy it for 15 years, and after that you can't enjoy it anymore. So if you enjoyed this, and in the 16th year of after enjoying the reinvestment allowance, you make additional investments in the business, it typically would not qualify for any more reinvestment allowance. Every year, we see various industry groups lobbying the government to extend or expand this reinvestment allowance, and the government has been very kind in recent years, has always listened. The current reinvestment allowance was meant to expire in 2022. As Dr. Johan alluded to earlier, we've now extended it to 2023 and 2024. So if you have companies which were looking to perhaps reinvest as we come out of COVID to really spend on large projects, this is certainly something you should think about. See whether the investments can be made before 2024 or by 2024 in order to enjoy the reinvestment allowance. Again, this is year of assessment, so financial year, not calendar year. So you'll have to look and see how this impacts your companies. I'd also mention that reinvestment allowance is mutually exclusive to many other Malaysian incentives. So if you have a more beneficial incentive, a tax holiday, an investment tax allowance of 100%, you'd probably claim that instead of reinvestment allowance. And if you're not enjoying anything right now, you're looking to expand or set up a new business in Malaysia, which is very capital intensive, you may want to consider approaching the government, authorities such as MIDA, to see whether you can get a more generous incentive before considering whether RA is right for you. But if really nothing else applies, then please do consider this RA. Next, please. The government has been very, very focused on digitalization over the last few years, both of government delivery and in the private sector. And the budget speech is, got various references to digitization or digital. What has been proposed in this budget is a new incentive for digital technology providers and digital infrastructure providers. So service companies and asset providing companies, which can enjoy certain incentives. Unfortunately, the detailed guidelines are not out yet, so we'll wait for those. But if you do have a company in your group which is looking to provide digital services or digital infrastructure, keep an eye out. There is a fairly long application period for this. You can apply up to 31st December 2025. So watch this space. Next, please. This is my second last slide. Right now, if you have a company which is doing business with the government, there are various conditions, of course, to be met, but no tax-related condition. What is now being proposed is that from 1st January 2023, so not 2022, 2023, there's a bit of time left for this. If a company wants to get involved in government procurement, you really need to produce something known as a tax compliance certificate. No details have been released on this as yet, but it could be that you will need to go to the Inland Revenue Board and possibly the Royal Malaysian Customs to get a clean bill of tax health, so to speak, to say, look, this company is a good tax citizen and is fit to do business with the government. Of course, the details remain to be seen. One area that companies will probably be thinking about is, hey, I've got this dispute with the Inland Revenue. They are saying my income is taxable. I'm saying it is not. Or I have a dispute with customs. I'm providing a service. They are saying it's subject to service tax. I don't think it is. And so this is a very legitimate dispute. I may be appealing to the Inland Revenue or customs. I may have taken this to court or tribunal. How will this impact my chances of getting a TCC? And that really remains to be seen. It'll be pretty interesting to see how those sorts of companies are impacted. In the meantime, what you can probably do is, take a bit of a step back, do a health check of your tax processes, your tax governance processes, and really see what can be improved while we wait for further details to come out on the TCC. Next, please. And this is really my last slide. We've seen a lot of changes, obviously, in the Malaysian tax landscape over the last few years. And as I've said, and as you would have heard from Dr. Johan, just this year as well. And this slide is just to show that it's not the end of the journey. We can expect further tax changes in Malaysia, driven by international development. So the most interesting forthcoming developments could be this proposal or this project by the OECD working with the G20. It's called the Base Erosion and Profit Shifting Project, which has two pillars, if you will. So on the left-hand side of that slide, Pillar 1 really seeks to tax the world's largest 100 companies. And what will happen is these companies will end up paying tax in the countries where their customers are located, instead of where their operations or headquarters are based. So that's Pillar 1. More interesting and more relevant to some of you here today, maybe Pillar 2. Pillar 2 is a proposal for a global minimum tax rate of at least 15%. And if you don't pay an effective tax of 15% in one particular country, there may be a top-up tax in another country. So this would be particularly interesting to those of you who are parts of multinational groups, which are large, and you have tax incentives in Malaysia or low effective tax rates in Malaysia for whatever reason. You may want to really consult your headquarters to see, look, are your incentives in Malaysia still right for you? Are they still going to provide a benefit once this BEPS 2.0 project is implemented in 2023? Do you need to relook at your operating model? Do you need to go back to the authorities in Malaysia to discuss a different type of incentives to make sure you still continue to enjoy the benefits going forward after we move into a 15% minimum tax world? So this is a project which is has picked up a lot of steam over the last year and a half or so, to be implemented in 2023, and it's a good idea to start looking at your profile now. So I'll really close with that. There were really several other tax changes which I wouldn't really go through because they're probably minor compared to what I've already talked about. And I wish you a pleasant afternoon, and I'll now turn it over to my colleague Cheng Guan, who will share with you his really interesting insights on indirect taxes. Thank you, and over to you, Cheng Guan.
Thanks, Anil, and good afternoon, ladies and gentlemen. Anyway, I'll just very quickly go through some of the key indirect tax changes that has happened during the budget announcement. Now, I think top of the list would be this special voluntary disclosure program, in short SVDP for indirect taxes. Obviously, the main objective, like Dr. Johan says, we have to find money for the government to replenish its coffers. So therefore, this main objective is to collect more money for the government. But the important point here is that the benefits to taxpayer is for phase one of this particular program, there'll be 100% remission of late payment penalty, and phase two will see a 50% remission of penalty. Now, these are all late payment penalties that will be had if, let's say, there was no SVDP in place. Phase one will begin from 1st January 2022 and will end 30th June 2022 for a period of 6 months. And those who have missed the boat, there'll be a phase two, which begins from 1st July 2022 and ends at 30th September 2022. Now, failing which, those who have not complied with this or not taken part in this, customs have mentioned that there'll be an enhanced audit that will take place after that. And therefore, the remission of penalties will not be there anymore. Yeah. So it's best that everybody just have a look at this and consider whether to do a voluntary disclosure or not. Now, on top of that, there's also going to be an amnesty of the tax portion, whereby you'll be considered on a case-to-case basis. Now, the taxes that are covered here are SST, sales and services tax, customs duty, excise duty, and GST as well. The opportunity for taxpayers in this regard is to actually, look into the health of your indirect tax reporting compliance requirements. More often than not, when we deal with our clients, this particular aspect of tax is mostly disregarded or not given enough attention by the finance function or tax function within a company. So I think it's an appropriate time for these companies to look at the company's regulatory requirements from an indirect tax perspective and perform health checks to understand where are the inefficiencies or mistakes that have come about, and perhaps decide whether to do a voluntary disclosure and to take advantage of the remission of penalties. Now, I think if companies who does this, there will be it will just have to minimize the reputational risk and future tax audits. Now, from our discussion with the Director General of Customs last Friday at our webinar, he has confirmed that those companies who participate in this SVDP, let's say for a period of 2015 right up to 2019, these 5 years where you have disclosed to Customs voluntarily, Customs will not initiate further audits on this. It's considered closed unless there are elements of fraud within that where Customs find out subsequently. And to acknowledge this fact, Customs will issue you a letter after the SVDP is done to say that you have participated in this program and this is the period that we have looked into and that there will be no further audits until and unless fraud has been uncovered. So I think it gives taxpayers the comfort that, or assurance that once you come clean with Customs and you can move forward with a clean slate and peace of mind thereafter. Okay, next slide, please. Okay, the other big thing that's going to happen in 2023 is that the sales tax will be imposed on low value goods. And currently, if we buy parcels or get goods from overseas via air courier and it's delivered to us, if the parcels are less than 500 ringgit, there's an exemption and there'll be no sales tax to be had. But come 1st January 2023, this particular item 24 of the sales tax exemption order will be revoked, and all goods below the value of 500 ringgit that are sold by parties from abroad will be subject to sales tax rate to be announced, but we were made to understand that the rate of sales tax for these particular items will be 6%. So there will be a need for sellers from Malaysia and abroad to register for sales tax and to charge sales tax whenever they sell goods that are imported into Malaysia via air courier and distributed to consumers in Malaysia. So this is going to be something new, and from our discussion with Customs, they are saying that they anticipate a collection revenue of around half a billion ringgit for a start. Okay, next please. The other interesting bit is, the indirect tax exemptions on electric vehicles. So as you see, currently we have import duty of 30% to be charged across the board, excise duty of 10%, and sales tax of 10%. Now, if moving forward from 1st January onwards, 2022, there'll be full import duty and sales tax exemption granted to locally assembled electric vehicles, as well as, basically it's going to be duty-free, the entire electric vehicle, those that are assembled locally from 1st January 2022 to 31st December 2025. Now, these are all CKD units, but if there are companies where they have not set up any footprint in Malaysia yet for an assembly of a motor vehicle, then you can still import these vehicles into Malaysia on a trial basis for a period of 2 years, duty-free. And this would probably help you to create more awareness of your products in Malaysia and to see whether there's a ready acceptance of your goods in Malaysia, right? But this is only a limited period where it is only granted right up to 31st December 2023, a 2-year period as well. Sugar tax will be administered on preparation of pre-mixed coffee, tea, malt drinks, and cocoa drinks, where the sugar content is more than 1/3 of the total content of the particular package. So if the content of sugar has breached the threshold, then a 47 cents per 100 gram of excise duty will be imposed beginning 1st April 2022. And there will be also excise duty on gels and liquids used for e-cigarettes and vapes with effect from 1st January 2022, whereby whether the liquids contain nicotine or not, there will be a 1 ringgit 20 cents per milliliter to be charged on all goods that are listed here. That starts from 1st January 2022. Next slide, please. A little bit of service tax, I think on the left here is just to make sure there's a level playing field. Currently, only taxable persons, registered parties are supposed to charge service tax on delivery charges. But moving forward from 1st July 2022 to level the playing field, all those that are not registered currently will have to register. Those like Lala Move, Ninja Van, and things like that would have to register for service tax and charge service tax, except for the delivery of food and beverages and logistics services. And there's a small exemption here where brokerage services related to trading of listed shares on the Bursa will be granted exemption. This is to spur more transactions in the Bursa Malaysia to ensure to increase the activities of buying and selling shares in Malaysia. These both have this will have effect from 1st January 2022. Next slide, please. Yeah, for my last slide, is just a summary of all the exemptions that are currently in place that's been extended. The sales tax exemption on passenger motor vehicle has been extended to 30th June 2022. Entertainment duty exemption in the federal territories has been extended to 31st December 2022. And tourism tax also has been extended, exemption has been extended to 31st December 2022. These are all in line with government's initiative to kickstart the economy, bring back the tourism into Malaysia and help spur the economy, and also to make sure that vehicles are affordable for everybody to buy. So these are all the initiatives that has been announced in the budget 2022, and that concludes my update on indirect taxes. Over to you, Daniel.
Thank you so much, Cheng Guan and Anil, for that very insightful session. I think a lot of companies would have benefited on these updates. So we'll very quickly go straight into our panel discussion. Just a couple of housekeeping rules. I think as we start the session, you may start putting in your questions in the Q&A chat box feature at the bottom of your screen, and we'll attempt to address as many questions as possible if time permits. So for today's panel session, we are pleased to have Mr. Amarjit Singh, the ASEAN Tax Leader and Malaysia Tax Managing Partner of Ernst & Young, to moderate this session. A very quick background before I hand it over to him. Amarjit specializes in tax structuring and incentives, as well as group reorganizations and IPOs. He has served a wide range of clients across sectors, including some of Malaysia's largest conglomerates and government-linked corporates. So with that, I pass this session over to you, Amarjit, to introduce the panelists.
So good afternoon, everyone, and thank you, BMCC, for having us here today. So I'm going to very quickly introduce the panel. So first on the panel is, of course, no other than Yang Berbagi Datuk Johan, who is currently the Director of the National Budget Office with the Ministry of Finance. And my second panelist would be Yang Berbahagia Dr. Ong Kian Ming. He is currently the Member of Parliament for Bangi, representing the Democratic Action Party, DAP, and a member of the Special Select Committee on Finance and Economy in the Parliament of Malaysia. My third esteemed panelist is Mr. Scott Magua, based in Southeast Asia. Scott is Dyson's Chief Operating Officer, leading the development, manufacturing, and supply of technologies from concept to production across all categories. Scott leads the global technology teams across Malmesbury, Malaysia, Singapore, Philippines, Shanghai, and the Bristol sites. Our fourth panelist today is Mr. Anthony Low, Head of Territory for Malaysia and Chief Executive Officer for BNP Paribas Malaysia. Anthony has more than 20 years of experience in banking and finance. Prior to his current appointment, he was the Managing Director and Head of Investment Banking Coverage for BNP Paribas in Malaysia. So there you have it. As you will note, this is a very diverse panel with range of experiences, and I'm sorry I'm cutting short their very long CV in the interest of time, but really a panel with a diverse range of experiences certainly will allow us to look at the budget through a number of lenses, especially economics, strategy, government policy, business operations, and of course tax. Now, as we have about maybe 40 minutes at max, perhaps if it's okay, we'll get straight into the panel session. And I do note there are some questions coming at the chat box. We'll look at it towards the end of the session. So we've heard Dr. Johan giving an overview of the budget. If I may ask and start off with Dr. Ong, with your respective overall take on budget 2022, especially on the projected economic growth for 2022, which is expected to be between 5.5% to 6.5%, exceeding global GDP growth. Dr. Ong?
Thanks, Amajit. Thanks for the very interesting overview just now by Dr. Johan and also representatives from EY. I found it very enlightening. And I already shared some of the information with some of my colleagues, fellow MPs who are interested in some of these issues. Just a very quick response. I think this budget is unique for many reasons. Firstly, because we are operating under a unprecedented global pandemic. Secondly, and I'm sure that many of your members here would know, this budget is operating under a condition whereby the opposition, for the first time in Malaysian history, political history, has signed a memorandum of understanding with the government with a few conditions, and one of those is actually to not to vote down the budget. So when voting happens this Thursday, we will not actively reject the budget. Thirdly, and I think maybe Johan didn't mention it just now, in terms of engagement with different stakeholders, this is the first time in Malaysian history whereby the Ministry of Finance has engaged with the opposition MPs, selected opposition MPs as part of a group, not just once, like what happened last year, but I think at least 3 times, if I'm not mistaken, whereby some of our proposals were incorporated into this 2022 budget, albeit perhaps with different sounding names. And I think Johan would also agree that some of the stimulus measures that were put in to the budget to the budget in 2020, just before the fall of the Pakatan Harapan government, are also continued in this particular budget. And some of the proposals that we put in to the 2020 budget are also in here, such as the 2 billion incentives other than tax incentives to attract FDI into the country. So because of all these unique factors, I think that the overall budget comes across as a very progressive document. The fact that it's expansionary, not just for next year and expected probably the year after as well, also I think allows us to support it and see the good points in terms of stimulating the economy. So there are a lot of good things that we can agree on this budget. I think one of the unique things that will happen next year, just to end, is that there will be various committees that will oversee and overlook the implementation of this budget. So there are very many aspects which are good, such as the Jamin Kerja project, which is supposed to spur the creation of 600,000 jobs. So I think what will be interesting and important is to see how Parliament can play a role to monitor and perhaps also give some inputs in terms of how to improve the process. Lastly, on the GDP projections, I think that we will have a strong bounce back next year because of different factors, such as the opening up of our Malaysian economy and also in the region. But I think we should also be careful because we've seen fourth waves happening in all across Europe and then now in the United States. We are thankful that we have a good vaccination program here in Malaysia and that it continues to go well, including those in the teenage years and also the booster shots. But I think we need to make sure that we don't have conditions arising in Malaysia whereby we are forced to shut down the economy, like what happened in the third quarter of this year that resulted in a contraction of the economy by 4.5%. So we expect a bounce back, whether it's 5, 6, 7%. I think also depends on the kind of base that we're talking about in 2021. So I look forward to actually working with Johan and others in the Ministry of Finance to see how we can work together to spur the country's economy forward. Thank you.
Thank you, YB. I echo. I think this time definitely there was so much more consultation. Even, I mean, as you know, I'm from tax. Even from the tax angle, I think at least we saw, at the very least, 3 consultative papers that were shared. Moving on, Anthony, maybe to get your overall perspective on the budget 2022, sir.
Thanks a lot, Amajit. So I think I think Dato' Johan gave a very good presentation in terms of summarizing the expansionary budget, which is of course the right one, given the current circumstances that we are living in. The priorities in the budget are indeed quite clear, which is to focus on improving people's livelihood and to revive the economy as a country recover from the pandemic. Many incentives are targeted towards industries and individuals most affected by the pandemic in order to aid this recovery process. I think a lot has been mentioned, Amajit, but I think it's worth mentioning that it's quite encouraging to see the government initiatives in promoting the sustainability and climate change agenda, which is frankly quite consistent with the ambitions of making Malaysia a carbon neutral country by 2050. So it's very good to see that being embedded into the budget. We're also quite glad to see that the banking sector remains in a position to contribute and play a key role in rebuilding the economy and in promoting the sustainability agenda of the country. I think there's a lot of reason for us to be optimistic as the building blocks are indeed in place. Echoing what YB Dr. Ong mentioned, we have a lot to be thankful for, looking at the high vaccination rates as well as the high commodity prices that we see today. But of course, you never know in today's volatile markets. So there's a need to continue to be nimble, agile, and vigilant at all times. Back to you, Amajit.
Thank you so much, Anthony. I echo. I think the sustainability measures were really admirable, and I think it's the call for the day. Very quickly, moving on to Scott. Scott, Dyson has been in Malaysia since 2002. Look forward to also hear your views on the budget 2022.
Yeah, thank you, Amarjit, and then a big thank you to Dato' Johan and also BMCC as well for the invite to this session. I think as many of the other panelists have said, I think the budget has a very clear focus, and it's very similar to many ASEAN countries as well, where it is relatively high, which is great to see. And the focus on healthcare, tourism, and as Anthony said, sustainability, I think is very welcome to restart the economy. Obviously, as a multinational company, that we invest very deeply for the long term in high-tech jobs in Malaysia, as well as manufacturing ecosystem. We want to have a very prosperous future around both of those areas. Obviously, one-off prosperity tax is going to hit multinational companies, so that may be a bit of a drag. But I think the talent focus in Malaysia and the ability of its technical schools should not be overlooked in terms of restarting the economy and making Malaysia stronger. Back to you, Amarjit.
Thank you, Scott. Thank you, Scott. Thank you. Dr. Johan, I was going to ask you for any immediate reactions, but the three panelists sounds that they are in full support of the budget proposals. And if it's okay, I'm going to pivot to the next topic, Dato.
But Amarjit, maybe I should just
Sure.
I should just quickly make the point that, as what YB Ong mentioned, and I should give due credit, we did receive a memorandum from Pakatan Harapan in addition to multiple engagements, and certainly some of the key measures and focus areas in the budget, including, for example, in Jamin Kerja, very much reflects some of the parameters that Pakatan Harapan had proposed, the focus on healthcare capacity. Even there were even proposals, right, on gender responsive budgeting, even like additional allocations for our D11 unit of our police in terms of more protection for women folk. I think many of these came from proposals from our friends in opposition.
Thank you, Dato. No, it's really I think heartening to see both both sides of the camp, I think, working together. So it's very positive for us. Dr. Johan, if I may, just quickly bring the next question over to you, and this is really about the fiscal deficit. I think it seems to be a question of concern. The fact that we are looking at another 6% deficit for the 2022 budget. 2021 we are expecting a 6.5% deficit. So really, your thoughts. Obviously, I think one key area to look at is through increase of tax revenue, and we see that coming through the 33% corporate income tax on chargeable income above 100 million, the removal of foreign source income exemption, as we heard earlier. But Dato, if I may, the mid-term and longer-term measures, your views, please.
But first, let me just touch again on the immediate term. As mentioned, the government's committed to not prematurely withdraw fiscal support, hence maintaining the deficit at a relatively high level next year. But in some respects, Malaysia is blessed. We have ample domestic liquidity, so we expect we will be able to finance our deficit without even having to resort to foreign borrowings. However, as briefed, this is not a sustainable level of a deficit, and certainly the government is committed to rationalize and consolidate our fiscal position in the medium term. As mentioned, we have a target of at least 3.5% deficit by the end of the 12th Malaysia Plan. Towards that, government will table its Fiscal Responsibility Act towards putting in even tighter rules of what government has to comply with in terms of spending going forward. Certainly, as part of that, we do need to ensure that we better administer our expenditure, but at the same time, certainly we continue to study various areas to look at how do we ensure a more sustainable broad-based tax. However, on that note, as mentioned, the minister did say that 2022 is not yet the right time for such a broad-based tax.
Maybe Dr. Ong, if I may, right, just alluding to the calls, I think, especially from the corporate sector, I think, on broadening the consumption base. So we've heard Dr. Johan's views, and what are your thoughts on this?
I think that we are probably not quite ready for a return of the GST, especially when the consumer sentiment is still probably a bit dampened by the very nascent recovery from COVID. So the kind of things that I think the Ministry of Finance has done so far in trying to look for different revenue sources. I think they've had to scratch and claw from many places, including gigs like QAP. Is a good start. But I think there actually needs to be more discussion on how to actually look for more sustainable sources of funding beyond just looking at GST, which I think is something that we have to put on the table probably later on. And I've mentioned this to Johan and also the Minister of Finance. Things such as looking at the various trust accounts that the government has, not just Quan, but others as well, to see whether they can be better spent in a more targeted fashion and a more transparent fashion. Looking at the trust accounts that not only comes under MOF, but and also the companies that comes under other ministries, such as the Ministry for Communications. They have a big USP account there. Companies such as EMGS that's under the Ministry of Higher Education. So there are a lot of these kinds of revenue sources, and of course the ongoing discussion on how to clamp down on the illicit, cigarettes and illicit alcohol. I think that costs somewhere between 3 to 5 billion ringgit a year. I went on my own spot check in my own Kawasan, and I found many of these illegal cigarettes being sold on the street corner as well. So, I think there are a lot of room, before to improve on the margins before we revisit the consumption tax.
Thank you, maybe Dr. Ang. I think, yeah, I hear you. So to explore other options, and I think the government, must be given credit. They've done well, right? Looking at alternative measures other than going straight to broadening the consumption tax. But what I'm hearing is that there are still other avenues, especially the tax leakages or revenue leakages from the shadow economy. Now, moving away from tax measures, if I may just solicit some views on speculations on likely inflation with the growth of economy. And maybe if I can start off with Anthony, your views, please.
Thanks, Amarjit, for the question. I think, with the recent pace and also the quantum of the quantitative easing that took place globally, right, not just in Malaysia, there's naturally inflation risk where it's hit. Indeed, it's a balancing act trying to ensure that the economy and the livelihood are back on track and regain its footing, while at the same time ensuring that we manage to control inflation and that it does not get out of hand. It's not the easiest, as one can imagine, and this situation is not specific to Malaysia, but a situation that all countries are facing, and central banks and regulators are monitoring very closely. I think today central banks around the world are very well backed with many tools, statistical data, as well as experiences in terms of managing and balancing such risk. I think in summary, depending on the state of the economy, depending on the state of the recovery, and depending on the actions of peers and other countries, particularly the Fed, the kind of pace of hikes, if and when this happens, will likely be well thought through in order to achieve the balancing act of, on one hand, controlling inflation, while on the other hand, providing sufficient support to the economy.
Thank you, Anthony. YB Dr. Ong, if I can also get your thoughts and views.
Sorry, I'm perhaps a little bit closer to the ground in terms of reaching out to the SMEs, especially those industrial associations and factories in my area. So all of them are complaining and reacting to the fact that costs have gone up. And I think this is part and parcel of the global squeeze. I don't anticipate it to change significantly within the next year or so. So the supply chains have to be unlocked first before we can see a moderating of inflation. But of course, in Malaysia, we all know the definition of inflation is, of course, a bit more control. So I think the rakyat will feel the pinch. My biggest worry is, what happens if, let's say, when the supply chain recovers, there's actually a stickiness in the prices. You know how prices don't really go down as much as when they go up. And if, let's say, there is a stickiness, then the CPI will go up on a more permanent basis. And then that, if, let's say, wages don't adjust, we'll see a permanent decrease in the real wages of the people, especially those at the B40 level. So that's the impact on inflation on real wages. That's something that I'm concerned about.
Amarjit, if I just may add on to what YB Ong mentioned, because obviously, global commodity prices have gone up. In Malaysia, obviously, as what YB Ong alluded to, we in the government do control prices. So, for example, RON95 prices remain at RM2.05, whereas actually unsubsidized price is actually closer to RM3. Perhaps in the medium to longer term, as part of our fiscal reform, we need to find a way to better target such subsidies so that really benefits the lower income. But I guess we also have such structures, like for example in our electricity bills. So even as fuel costs are rising, even if there's a need to then do what they call the cost pass-through, we always have a structure where, for example, we have the lifeline ban. Those households consume more than, I think, less than 100 kilowatt per hour, basically then have a lower and a fixed electricity tariff, so that the pass-through is on the high utilization households.
Thank you, Dato'. So clear. I think what I'm hearing is that there are concerns on the impact. There are also at the same time measures already within our system, as you mentioned, Dr. Johan, the fuel prices and the electricity prices. But perhaps as we get into this, more targeted subsidies to those that to those groups that are more impacted. So thank you. Moving to another topic, attracting and retaining FDIs. So the budget in itself may not have announced any major initiatives, but that may be because over the last 1 year, I think that there have been numerous announcements in this space. But I would like to take the advantage of getting views from Scott in terms of the attractiveness of Malaysia in terms of attracting investments vis-a-vis its neighbors in ASEAN. Scott?
Yeah, thank you, Amarji. I think ASEAN at the moment is incredibly attractive, particularly due to the issues in China and US. So I think many multinationals are finding ASEAN and Southeast Asia particularly very attractive. But I do think we've as a company have had great success in Malaysia for many years, almost 2 decades now, and that's R&D and manufacturing. And I am very positive about Malaysia. However, I do think Malaysia can do more versus its neighbours. One of the biggest issues is labour and how to ease the foreign labour quota and to simplify schemes such as the recalibration programme. That is very difficult to get an operational plan for Malaysia at the moment. That's less to do with finance, but more to do with general strategy around attracting FDI. I think from a financial perspective, many companies can see why it's attractive, but when it comes down to how do we actually make it real, I think there are some real issues that have occurred because of COVID. And I think that's more that can be done. I think on a positive note, if those types of issues can be resolved, I do think there's a great wealth of young R&D technical talent. And I think that goes to that point that Dato' Johan had talked about around digital and the investments there. So I do think a bright future is ahead of Malaysia on that side. But again, that will need good investment and technical talent to really deliver on those ambitions of becoming a tech hub. They would be the main point. They'd be the main points from my long experience in Malaysia. Yeah.
Amarjit, can I respond to that a bit?
Yes, please.
Yeah. In my capacity as a former Deputy Minister of MITI, Scott, I've had many interactions with your not your direct colleagues, but a lot of your suppliers in Johor Bahru, of which there's many, and all of them come to me with the labour issue, right? Correct. So if there's one issue, I think in this budget and also in the 12th Malaysia plan that I think was definitely needed to be addressed and wasn't addressed sufficiently, if at all, was Malaysia's plan in terms of how to manage our foreign labour challenges moving forward. I do think that the country needs to open up to foreign labour, eventually, and I think the government needs to come up with the plan sooner rather than later, not just for the manufacturing sector, but for, let's say, foreign maids, for the plantation sector, because many of the workers who had gone back to their home countries have not been able to return to Malaysia. So that's something that's very necessary, especially in the short term. But in the medium to long term, I think we need to really address those issues that have come as a result of COVID, especially because we've seen the accommodation standards of many of the many of the companies that employ foreign laborers, including some of the subcontractors to the multinational companies, have not treated their workers very well and have put them in substandard accommodation, leading some of them to be blacklisted by the Americans. And further down the line, I'm sure that that will be expanded to other industries other than the glove industry. So this is something that we really need to tackle. So for example, whether or not we can introduce fairly quickly the multi-tiered levy system, and that may actually help MOF and Johan's side raise some additional money as well. So that the foreign workers levy actually runs into the billions of ringgit. If I'm not mistaken, somewhere in the region of 3 to 5 billion ringgit. So once that is up and running with a proper sort of like coordination among all relevant government ministries, not just the Ministry of Finance and Ministry of Human Resources, but also the Ministry of Housing and Local Government, Ministry of Health. This is something that we really need to address for industry and also for the Malaysian health system.
Dr. Johan, is it okay if I get a sort of an immediate reaction? Seems to be quite a hot area.
No, I'm very, very grateful for, I think, the interventions that YB has made. But I think one thing I just wanted to follow up from what YB Ong mentioned was, in terms of issue on foreign workers. Sometimes I even saw a question on the list about minimum wages. But I think one thing that Malaysia perhaps needs to also focus on is on minimum work conditions, and I think that's important. Especially to recalibrate, between the dependence on foreign workers and the need to provide good working conditions for Malaysians and also the foreign workers as well. And I think this ties in also to what I think YB Ong and some of the others mentioned. It is really critical, especially as we see new waves of COVID, especially in Europe, that we work very closely, government and the private sector, to ensure that SOP compliance by the private sector, and this, an important part of that is the worker accommodation, continues to be focused on, because what we really cannot afford in 2022 is another wave and spike of COVID that would necessitate some form of restriction or lockdown. So I think that's maybe one area which I think we need to focus on.
Thank you. I'm going to move on to the sort of maybe touch a little bit on digital. As we know, the pandemic really accelerated the digital transformation, not just for corporates, I think for the government as well. Maybe Dr. Johan, to get your perspective in some of the initiatives that the government has put in place, and then I'll get Scott to also give his views, in terms of Malaysia's position as perhaps as an ASEAN regional tech hub. Dato'?
Sorry, I was on mute for a second. Sorry. I think in terms of digitization, as mentioned briefly, one part, the government is focused on investing on the infrastructure. Obviously we're focused on the 5G rollout as a key part of the infrastructure. Jendela is also being undertaken aggressively together with the telecommunication companies, with even an additional 700 million budgeted for in 2022 to also cover some of the industrial parks and also public buildings like schools. So that's on the infrastructure side. Government also has put in place a new policy to promote cloud, and I think that's again as part of a transition towards I guess what's the practice currently, but also to attract such companies to then also expand their presence here in Malaysia. On top of that infrastructure and cloud, we also have, for example, the digitalization SME grant. I think one of the things for take up amongst SMEs, we have this matching grant of up to 5,000, where SMEs, they take on even like accounting, inventory, points of sale, software, providing a matching grant. And on top of that, there's you may have heard the Shop Malaysia Online, where it provides basically onboarding, free onboarding for SMEs onto some of the major existing platforms, so that I guess SMEs, but see those they were affected during the lockdown, but also to enable them to broaden their market reach, to get used to putting their products online, to be able to, I guess, take advantage of digitalization.
Okay. Thanks, Dato'. Scott, maybe to hear your perspective as well.
Yeah, I think, as I've said, in terms of the talent base within Malaysia, I'm incredibly positive with what comes out of technical schools is at a world-class level. And I think if that industry and education can work together to turn out young people that will be the future of Malaysia's digital technology, I think that it needs to be a focus area. But at the same time, I think if you look across some of the verticals that I know quite well, where if you look at R&D, we've been able to build up a capability, of robotics capability within the south of Malaysia and Johor. That's been through many years of working with technical schools, but also the manufacturing industry as well. And we've seen huge advances in a lot of the manufacturing industry becoming much more automated at the same time. And I think for many of Malaysia's neighbours in Southeast Asia, I think that could be a really key area. And many of the skills at a fundamental level are very similar. And they can go out into all these verticals. So I think the possibility is there. I think the potential is there. And I think it's about that partnership with industry and then really accelerating that through.
Yeah, Majid, can I just contribute briefly? I think the digitalization grant initiatives was started, if I'm not mistaken, back in the 2020 budget. I think we had similar digital initiatives such as the 5,000 ringgit grant, and they have been continued. Not just at the federal level, but the Selangor state government also offers similar incentives through the CDET program, CDET Digital Initiatives program. Initially in 2020 and 2019, it was very difficult to get the SMEs to onboard and to apply for these digitalization grants. But once COVID hit, I think the demand spiked up. And I think one thing that is good about this budget is also how the digital providers have also been highlighted as key people to reach out to and to provide certain incentives for. And once we build up that digital ecosystem, especially on the digital providers part, then they will be able to do the hard work of reaching out to those that needs to be onboarded. Perhaps one last thing that I think is good about what MOF has done, relating to the digital front, but not necessarily in terms of digitalization grants, is the Penjana financing schemes that has been given out on a one-to-one basis, together with some of these investors, especially those in private equity, in the private equity space. So what has happened is that as the money has come in from private equity, including from foreign sources, and matching grants have been given by the Ministry of Finance, up to 600 million ringgit, if I'm not mistaken. What we've seen is many companies investing in their digital investments, a lot more promotions in the digital market space, and of course that led to, I think, directly or indirectly, the creation of Malaysia's first unicorn, which is Kasem. So that's good news that we need to promote in Malaysia, so that there's more of such a excitement over future digital initiatives, and also companies in the digital space that will grow and put Malaysia's name on the map.
Dr. John, did you want to say something on digital?
No, I think one thing that maybe just to add on to what YB Ong has mentioned, was I think referred to the initiative from Penjana Capital. We also have SE also promoting what are in budget 2022, we're also trying to grow the whole space of alternative finance. This includes some quasi-equity financing. Even SE is growing their equity crowdfunding. I think what we find is that in Malaysia, we've got a lot of domestic liquidity. It is being used in the traditional form of bank financing, also in terms of stock market. But perhaps what still seems to be not sufficiently deepened is the space on venture capital to support our startups. So I think that's something that is a focus area, and we'll continue to see how we can develop that.
If I may, Dato', right? So ask Anthony if your thoughts. I mean, this theme about getting venture capital into the digital space, investing. It's a common theme. We hear that the savviness is probably not there. Anthony, any your observations, your thoughts in this space?
Yeah, no, thanks, Amarjit. No, I think there is a lot of interest in digital, especially digital tech, and there are a lot of energy, particularly in terms of young entrepreneurs who are coming up with various ideas and willing to take the plunge in terms of pursuing their ambitions or their ideas, which can be quite game changers. The challenges most of them face sometimes when we talk to them is because as a startup, the ability to get the relevant funding in terms of size and scale, which is where usually they face a lot of hurdle, especially at the early stages of the fundraising. But having said that, the government has put in place several initiatives on that front in order to support such development. Is about really a matching of and selecting the right and putting the money behind the right entrepreneur, the right business model, in order to build success on success. I think that's the key driver to make this a true sustainable lever for Malaysia.
Thank you, Anthony, and actually thank you everyone for the very candid, open sharing here. I know we are probably 2 minutes more than the scheduled end, but if I may ask, just one key final message from each one of the panelists, and if I may start with Scott, yourself.
Yeah, key message for me is to keep investing in the future talent, because I think that can really create this digital future and a much richer economy for Malaysia. And the second message, I know you said one, but that labour issue is very important in the short term, very important.
Okay, thank you, Scott. Thank you, Anthony. Yourself.
Yeah, I think a lot of lessons and also things that has been said. I think one key thing that perhaps we need to continue pursuing and keep the momentum going is really the sustainability agenda. It is very glad to see that Malaysia is championing the agenda as reflected in some of the initiatives that is announced in the budget. I think is worth mentioning and to applaud the Ministry of Finance, Dr. Johan and his colleagues, as well as the Ministry of Environment and Water, which announced recently the welcoming of the Asian taxonomy for sustainable finance, which is indeed a very good progress and a major milestone achieved in terms of progressing this agenda. And we at BNP Paribas, we are indeed looking forward to play our active role in partnering corporates and institutions, including with the relevant stakeholders in the country and stakeholders in the Ministry of Finance in terms of progressing the transition economy to a greener future.
Thank you. YB Dr. Ong?
Yeah, one key message, implementation is key. And I think the difference between previous years and this year's budget moving forward is that the opposition has more direct channels to the government to propose ideas and views. And of course, given the fact that some of us have actually been in government before, I've worked with Johan when I was special officer to the former Minister of Finance, Lim Guan Eng. So I'm sure that the communication lines will continue to be open, and that good ideas from both sides can be implemented in the spirit of good faith to help the Malaysian economy recover.
Thank you, Dr. Ong. Dr. Johan, for you, I think really giving the last comments, it sounds like it's a thumbs up on the budget from everyone on this panel, minus the bit on foreign labor.
I'm about to say foreign source income, because I thought you were about to say foreign source income, because I saw a few questions on the thing, but that's for another day. But I'd like to echo, I think, what mentioned by probably Scott in terms of human capital. I think that's why I see a big emphasis on the job recovery, which also includes reskilling and not to forget the importance on the digital side, which links on to my second point, picking up on what Anthony mentioned. I think certainly it's very important for us to focus on reform towards greater competitiveness, and that includes areas of digitalization, sustainability, and also promoting the right sort of investments for Malaysia. But I think the third and probably final and most important point is what YB Dr. Ong mentioned. I think most important going forward in 2022 is how do we continue to work together. I think everyone in Malaysia, I think we're recovering on the crisis, and that's why we work with the opposition. We like to work with the private sector and also civil society to ensure that we get out of this COVID crisis. We need everyone to work together. For example, to maintain SOPs, because we certainly don't want any more further lockdowns. We want to basically, get back to business, get back to and reclaim our lives as we used to enjoy it pre-crisis. Thank you.
Thank you, Dr. Johan. Dr. Johan. Thank you, everyone. Thank you all panelists, Dr. Johan, Dr. Ong, Anthony, Scott, for your very valuable views and I think sincere, candid views. Really appreciate it. And it's really heartening, I must say again, to see both sides of the camp, having interactions and honest and candid discussion. So with that, I bring this session to a close and pass it back to Daniel.
Thank you, Amajit. Thank you to all the panelists. Okay, that brings us to the end of our webinar today. And on behalf of the PMCC and CCI France Malaysia, we would like to thank all our speakers, panelists, and moderator for giving their insightful thoughts and a very robust discussion today. And it certainly has helped participants who are here today broaden their perspectives and understanding on the budget. So thank you everyone for joining us today, and I hope that you found this session useful. Please complete the feedback form provided in the chat box. We would love to hear from you. Stay safe and thank you.